Welcome to the Trading Story Podcast, episode 95, Swing and Position Trading Stocks with Toni Turner. Let's do this.
This is the Trading Story Podcast, where we bring newer traders, practical and inspiring interviews and tips to help you become a consistently profitable trader. Here's your host, Brandon Clay.
Hey again, everyone. This episode of the podcast is sponsored by K Capital Advisors. Like our guest, Toni Turner, K Capital also swing trade stocks, though with a different approach. K Capital is in their third year, but Kyle Fisher, who runs K Capital, has been trading for over 10 years. To get his free stock trading tutorials, check out tradingstory.com/kcapital. Now on to the program. Hello, everyone. Welcome back to the podcast. Our next guest is the president of TrendStar Trading Group and runs ToniTurner.com. She is the author of a best-selling book, A Beginner's Guide to Day Trading Online, now in its second edition, as well as numerous other books. She's been a guest on CNBC, CNN, MSNBC, Fox Business, and has contributed to numerous financial publications, including TheStreet.com and Weiss Incorporated. She speaks regularly on trading and investing topics throughout the country, and it is my pleasure to welcome Toni Turner to the Trading Story Podcast.
Hi, Brandon. Nice to talk to you.
Well, thank you so much for taking the time, Toni. Really appreciate it. Tell us a little bit more about yourself and what you trade.
I trade primarily stocks and exchange-traded funds. I've been trading for about a bazillion years.
We'll leave it at that.
It's okay. It is what it is. I started back in the mid-90s in the big day trading craze back then. So I've been staring at these charts for a long time.
Well, something's worked out for
Yeah.
you, and that's great that you're still in it even after the 90s and bulls and bear runs and all that stuff. So good for you.
Thank you.
For the newer traders out there, can you briefly explain what an exchange-traded fund is?
Well, sure. An exchange-traded fund is, if we want to be technical, we can call it a marketable security. It is a fund, and these funds, or this marketable security, tracks indexes. It can track commodities. It can track baskets of assets. Usually they have a theme. So we can have an equities ETF, meaning it tracks a basket of equities, and usually there's a theme to that basket. Maybe it's a sector like the energy sector or the financial sector, or we can drill down to some of the smaller parts in those sectors. As you know, there are hundreds and hundreds now of exchange-traded funds. They can also track commodities futures, indexes of commodities futures, countries, bonds. I think there is now an ETF for everyone.
And do they grow every year, or are they kind of stagnant right now?
I think when you say grow, of course, right now as we talk, someone somewhere in a fund family is thinking up the newest ETF.
Okay.
So the ETF universe grows, but like all universes, there are going to be some ETFs that they say, hey, that didn't work, and they take them off the market. And of course, now we have leveraged and inverse leveraged. Some of the companies call it geared, so they'll go up 1, 2, 3 times more than the underlying index, or they'll go down 1, 2, 3 times more. They're really actually getting a little complicated now, but there are no reasons why a beginning trader should get into any of the complicated funds. You can easily just trade the S&P 500 and use the spider called the symbol is SPY. I mean, you can keep this as simple or complicated as you want it to get.
Toni, how did you get into trading in the 90s? What is your trading story?
I became interested in trading back in the 90s when a friend of a friend said, hey, I was in Chicago, and a friend of a friend said, "Hey," and he was a commodities broker, I remember, and he said, "Would you like to go visit the Chicago Mercantile Exchange?" And I'd kind of vaguely heard of it, and I thought, well, heck yeah, I'll go. And I had been kind of looking at the stock market and dabbling in it. I had been in it, or have been an investor, but this was a whole new world to me. So I said, sure, I'll go along. So we went on the floor of the CME with this broker, and I was absolutely blown away. I turned around and said, this is what I want to do. I just suddenly, I mean, one could say I fell in love, certainly at that moment in time, with the markets, more so than before. As an investor, I had questioned my stockbroker so constantly that I know I drove him crazy, and he nailed me. Oh my gosh, I mean, we talked 2 or 3 times a day, and back then the internet was, of course, not so easy to wander around, and there wasn't much there. So he would send me reams and reams of all this paperwork that I would sit and read and watch CNBC. But when I went to the floor of the Chicago Merc, I said, oh, this is it. I love it. And then we went to the Chicago Board of Trade, same thing. And I said, I'm going to do this. And first thing they said, well, you're not going to have an easy time. And I said, why not? They said, because you're a woman.
Were they right?
Not so much.
Not so much.
They haven't that stubborn. So I came back home and I started studying trading, which made my broker very unhappy. He said, no, you're going to get creamed. You have a high-risk nature as it is. But I kept going. And parts of it were really ugly.
20 years later, you're still in it, which is awesome.
Yeah,
Very cool.
yeah. I lived through it. Amazing.
I don't think I've ever heard the term "fell in love with the markets" before, but I guess that's pretty accurate. I mean, that's how a lot of people feel, but you've just articulated it so well.
Well, thank you. I think, I mean, it is the most exciting place on earth. It just is, and maybe that's just me, but to me, where can you walk into, no matter who you are, where can you walk into an arena that has so many moving parts to it, and a lot of these moving parts move other moving parts, and I like to say it's like a big symphony orchestra. Every instrument indeed has to play a slightly different part of the piece, but when they all play together, the piece is beautiful and harmonious. And the market is just like that. Oil's going one way, bonds are going another, and all together it forms pretty much a single opinion. So I just think it's fascinating.
It certainly is. Toni, every trader loses, but take us back to your most painful losing trade.
Oh gosh. Some things you don't forget, Brandon. And it was back very close to when I started. I was trading, and of course didn't have anywhere near the knowledge I have now. I was trading in an online trading room, I remember, great people. And I remember I got a really bad case of the flu. And my mother brought me up with the ethic that, oh, just work, it'll be good for you. So I thought, oh, I'll trade, it'll be good for me. It was not only not good for me, I think that day I lost $3,000 or $4,000 or $5,000. I mean, I made really dumb decisions. And that's one lesson I learned quickly. Do not trade on days when you're sick or upset or very, very tired. Just don't do it. You don't see anything with a real lens. You see it with a gray fog across your lens, and it's not a good idea.
And you don't really realize it at the time. It's after the fact that you understand there's a fog in that.
Absolutely. Absolutely. Yeah, the reality comes in when you look at your balance, you know.
Sure. Well, tell us about the trading, rather the turning point in your trading. When did you become consistently profitable after you started?
Well, and this may be a way that it won't be helpful to new traders right now because I don't believe there's any such thing anymore, although there's online rooms. When I really got into actually trading, and there's I actually, the truth is, I started losing money pretty rapidly. I didn't know what I was doing. It was ugly. There was not any information on the internet like there is now. And I was losing money. And at the time, I was a single mom, and it wasn't a good idea. And I actually, the story is, I went to church, and the pastor said, at the end of the sermon, all right, let's all pray for a miracle. And so I sure had one to pray for. So I remember praying and saying, dear Lord, please show me if I need to quit this right now, let me know, or if I should go ahead, please let me know. And a few minutes later, in the room with coffee and conversation, there was a woman who said, Toni, I know you're getting into this trading thing. I have a friend I want you to meet. And here were two traders, a husband and wife team, who had been trading, who were successful. And I guess I just looked terrible because the man looked at me and said, oh, wow, you need help. And I said, yeah, I sure do. And they became good friends, and they showed me a lot of what they were doing. And of all things, I ended up in a trading room in White Plains, New York, where I actually moved up there for quite a period of time. And I sat in this trading room with two mentors and a group of traders. And I learned how to trade, and
that's awesome.
That was the turning point. Now, I know that there aren't many chances like that anymore. The physical trading room was great, but there certainly are good online trading rooms that can help.
So the mentoring really is what...
Yes.
Well, the prayer helped too.
The prayer helped, darn right. Had I not been at church that day, I wouldn't have met those people. And the mentoring, and I can still hear what my mentors said to me at the time, different things they'd say about charts or entering or exiting trades, and some things you just don't forget. And strangely now, I hear people say to me, Toni, you said this and you said that, and I did it, and I'm so glad you said it. So it pays forward,
That's awesome. So it's been a few years since you've started, and you turned the corner, became consistently profitable. In that time, what has trading done for you, for your family?
Well, now, quite honestly, probably a different road than it would for other people, because I was also a writer. So, it's changed my life beyond anywhere I ever thought I would go. If you had told me in 1992 that I would be where I am today, I certainly wouldn't have believed you. And in moving to New York and sitting with that group of traders, some of whom are still friends of mine today, in that learning and that camaraderie, it was invaluable. And then I took the route of writing a book about it, and that first book took off. So that's a little different than a lot of traders would experience. But trading has taught me to think differently. It has it certainly helped me organize my thoughts. It certainly helped me learn how to compartmentalize emotions. When you go into your trades for the day, when you go into trade for the day, you can't afford to live in the room in your brain that's negative, that says, oh man, you are the dopiest trader I ever saw. You're as dumb as a box of rocks. You can't afford to stay there. Your account can't afford it, and you can't. So I've learned how to direct my emotions and my approach. And when you take that outside, you can learn how to direct your emotions and your approach in different places in everyday life. So that helps. of course, at parties, people run up to you and ask you what the stock market's going to do next. That's not always a big help, but I don't usually let on very much about what I do. But it's taught me to think differently. It's obviously brought, profits into my life, or, I've made money doing it. That's a good thing. Yesterday, my husband had a stock he liked, and he doesn't read any charts or anything. And I said, it's going to start going down now. And it had really flown. And he said, oh, no. I said, trust me on this.
And you know something about that.
Yeah, he said, all right. He moaned and groaned. I took him out of the stock, and today it's down 10%. So,
wow.
It's hard work. You better love the stock market when you get into this. You just better love it if you're going to get into it. Yeah. If you're going to immerse yourself in it for more than an hour or so a day, you really need to love it, because she is a very fickle, wild lady, this stock market.
So we're going to shift a little bit, get a bit more practical for the listeners out there, and we could go so many different directions in this conversation. You having so much experience trading, and of course writing about the market, being an accomplished author as well. But I wanted to focus in an area that you have a passion for, maybe more than other areas, and that's swing trading. Mm-hmm. So maybe for the newer traders out there, could you briefly give an overview of what swing trading is?
Swing trading, and there are different definitions, Brandon. A lot of people kind of give it their own definitions, but for me, swing trading is and it's easily defined on a daily chart. Swing trading is the strategy or the methodology whereby I look, and let's just talk about longs for a minute. I look at a stock or an ETF that's either trading in a low base or maybe the first base up, and I'm looking for it to be trading, either consolidating and looking like it can break out, or pulling back to support and looking like it can break out. And so I have a couple of entry there. My goal is to enter on support and hold it for anywhere from 3 days to 5 days. I've been known to hold a stock that followed what I said it needed to do for 3 or 4 months, because that was really the upswing according to my methodology. And I like those the best. You make the most money when you stay in one stock, as long as it does what your rules say it will do, or you stay in as long as it does what you need it to do. Probably make a lot more money in the ones that do well than if I jump in and out of a dozen stocks. So I like the ones that go up. Technically, swing trades are 1 to 5 days. That's usually an upswing on a daily chart, but sometimes if you use the methodology I do, you can end up staying in it a lot longer. And as soon as that price swing, we're going to call it, is done, then we jump back out. So it's swing trading. It's playing a price swing, in this case to the upside, or in the case of shorts to the downside.
Got it. Now you mentioned staying in some stocks 3 to 4 months, or maybe some ETFs 3 to 4 months. Is that technically a swing trade, or is that closer to position trading?
I suspect that people would call it closer to position trading. It certainly can be a hybrid, I imagine, because with position trading, or at least the way I do it, it's a trend trade. So if for me, a trend trade or a position trade is, I hold it for as long as it's in an uptrend. An uptrend is, as you know, is higher highs and higher lows. So as long as it continues to make higher or even lows, higher highs and higher lows, I'm in the trade. When it stops doing that, I take profits.
Got it. And the the instruments that you're using, and we talked about exchange traded funds earlier. Is that primarily what you're using on these swing trades?
Oh no, I use stocks too as well. Certainly use stocks as well. And I have been known to use commodities ETFs. Some of the ETFs that the agricultural, like the corn ETF symbol, symbol CORN.
All right.
I know, huh? And that's easy for me to remember.
Same thing with OIL.
Yeah,
right?
yeah, there's that. I can understand this. So some of those, what traders have to be careful of, though, and I think new traders may not know this, is that the commodities ETFs, if these ETFs follow an index of futures for that particular commodity, you are taxed differently by the IRS. It's a beneficial tax structure, but you're still, it's different than if you were to make money with, say, the energy ETF, like the XLE. You're taxed differently with the XLE, that's standard income tax, than if you're trading, say, the USO, which is oil futures. So it's just, I think a lot of traders get into ETFs and they don't take the time to read the fine print and know what they're getting into, and then they get all surprised when the end of the year comes. Now, if you're trading ETFs in an IRA or a tax-advantaged account, you don't have these problems. But if you're trading it in a traditional account, you've got to really make sure what you're getting into.
So is it worse or is it better tax-wise if you're trading outside of an IRA? For an ETF, for instance,
well, for a
compared to
commodities
futures.
ETF, like the USO, the oil, like corn, CORN, that's corn prices, obviously, or the DBA, which is an agricultural ETF that follows. It's actually better because they tax the profits like a futures, and I don't want to get tangled up in this because I don't know that I'll say it correctly, but they consider the profits to be half long-term, which of course means you held it for a year or more even if you didn't, and half short-term. And I really can't go into this because I haven't talked or thought about it in so long, and I don't want to steer people in the wrong direction.
No problem at all. So curious about the setups that you're using. You mentioned long, you mentioned short. How often are you doing each one, and what's the setup that you're looking for before you enter a position?
I use a setup, and I use it in Toni's Market Club. We've used it for 7 years. It's one I developed by sitting and staring at charts. I use the 8-day, let's call it a daily chart. I use the 8-day exponential moving average. Now you can use simple if you can't get exponential or don't understand exponential, but let's just call it the 8-day moving average. As well, I use the 13-day simple moving average, and I always want to, on my charts, I always have the 50-day moving average and the 200-day moving average. Those are all simple. I use the crossover of the 8 above the 13 as a signal to pay attention, and then I look for the next zone of price resistance when price pops over that 8 and 13 crossover. That can be an entry. And then as long as my stock walks, or ETF, as long as it walks up the 8-day moving average, I'm a happy camper.
Okay.
At the point, and these will not be swing trades that last for months. You don't often get one that does months, but you can get one that will do weeks sometimes. As long as the stock or ETF walks up that 8-day moving average, I'm in. At the point to where it's going to close below that line, or absolutely if it's going to close below the 8 and the 13-day moving average, I take profits.
That sounds simple
It's
enough.
simple.
Yeah, yeah. How about the watch list? I mean, how do these stocks or ETFs, commodity ETFs, get on your list where you're looking at them and saying, okay, if that MA, if those MAs cross, I'm in on this particular one, because you can't watch 5,000 tickers, right?
No, I do have, as I suppose most people have, I do have a watch list on my screen that I do watch every day, all day. It is the Dow, the Nasdaq, the Composite, the S&P. It is all the futures. It is the bonds. It is oil futures, all of that. And I can pretty much look at that list of maybe 20 internals, including the VIX. And I've been doing it so many years, I can look at that and pretty much in a heartbeat tell you how the market feels, at least at that moment in time. But then I keep the sector spiders, and you just go to sectorspiders.com. They are the 9 sectors that are within the S&P 500. So it's all the select sector spiders. I keep them on a watch list. So it's like the XLF is financials, XLE is energy, XLB is materials, and so forth. I have those, and then I have a bunch of industry group ETFs, like retail, like semiconductors, like water stocks. I love water stocks. They're so boring. Nobody goes there but me, which is fine. Which is fine, because I think in the long run, water is going to become very important to the world. I like solar is looking up right now at any rate. And I keep a watch list of several of these ETFs on my page, maybe 20 or 30 of them. And then I go through them, not every day, depending on what's in my account, but probably every other day. And I look at each one to see which sector or industry group within that sector is popping higher or forming a good setup. Now, I can either trade that ETF, or I can, and I've learned over the years to do this work, although some people don't like to, I also have lists of companies, components of the companies within each of those ETFs, maybe the top 5.
Sure.
You know, so I know that if the XLE, the energy ETF, goes up, I know I better look at Exxon, I better look at Chevron, I better look at Schlumberger and Halliburton. It's just because those are the top ones, and I have those memorized. I don't have to look. And within the banking industry, of course, we have Wells Fargo and JP Morgan and like that. So one strategy when you get a little beyond the novice stage that you can do is you can position trade the ETF and say, hey, this sector might go higher for some time. I'll hold it as long as it's in an uptrend on a daily chart. And then you can swing trade some of the leading components. So maybe if it's energy, you swing trade in and out of Exxon or Chevron.
That's cool. That's great.
And that's one of my favorite strategies. So then when the market starts down, you get out of the stocks if you have 3 or 4 stocks. But maybe you say, yeah, but the sector is still in an uptrend. So until or if it rolls over shortly, I stay in it. And that gives you that sector for the longer term.
How many positions are you holding at any one point?
Oh, gee. I've got several accounts. So
say in one account, if somebody were to follow a portfolio that you're managing, so to speak, would all of the positions be allocated? Would you have any cash?
Oh, yeah,
Does it depend on the time of year?
Cash. Definitely.
Okay.
And now I have probably a little more cash than usual because for this point in our time, we have a Fed announcement coming out that could be a little volatile. So I always have cash on hand. As a new trader, I went through this painful thing called a margin call. And back then they would call you and chastise you. It wasn't an internet message. I mean, they would call you on the phone and read you the riot act, and I didn't do it on purpose. I simply didn't add right, and they let me buy more stock than they should have, but it wasn't sophisticated back then. So it was like they'd let you make the mistake, and then they'd call you up and give you a heck. So
Nice.
now they don't let you do that, but I always have cash, because sometimes all of a sudden you'll see this opportunity that comes out of the blue, and you sit and you do your research on it, and then you say, hey, so I always want to have cash on hand. I probably always have 10% of my account in cash.
Got it. And the rest is deployed across, say, 9 other positions or so?
Yeah, I'm going to say 9 right now. Mm-hmm.
Stop loss. What kind of stop loss are you using for these?
For these, we have and this setup I just told you about is called the Sleeping Tiger setup. So for this, it's simple. As I said, the stock will, hopefully, and if it doesn't, you get stopped out. But the stock will walk up its 8-day moving average at the point that, and it will at some point, that it rolls over, and 5 minutes before the close, you can tell that it's going to close below its 8-day exponential. Then you take your profits. Now that's strictly a swing trade. There's an alternative to that I call the red and blue stop, because my 8-day moving average is always red on my screen, and my 13-day is always blue. So to cut it a little more slack, you say, all right, if my position 5 minutes before the close or 10 minutes before the close looks like it's going to close below the 8-day exponential or the 8-day simple moving average, then I take profits on half my position there. Then the next day I watch it, and if it goes below the blue or the 13-day moving average, I take the rest of my profits there.
Got it. So that's for a profitable trade.
That's for a profitable trade.
What happens when it doesn't go your way?
You get stopped out, and my initial stop is usually, it's technical, but I'm going to say that more than not, it ends up being about 2% below the intraday low.
Okay. Makes sense.
Mm-hmm.
In the course of you doing this now many years and developing your system, I'm sure getting better over time, over the past couple of years, what kind of returns have you been able to get for these accounts, and maybe even for some of your students?
Well, this year has been tough. 2015 has been tough, but we've logged in this year, oh gosh, I'm trying to think of me and the market club, so we're probably logging in about, I don't know, 15 to 18% this year total.
And with the market flat?
With the market
right?
flat, it just hasn't been a big help. We've done real well in some periods, making 20, 30%. But then, like last week, we got stopped out fast out of quite a few of our positions. So this 2015 has not been as much fun.
Well, you're beating the S&P, though, it sounds like.
Yeah. Well, yeah.
Doesn't sound like that's too much of a challenge for you.
Well, of course it is. Of course it is. And it is a challenge. It's very definitely a challenge. But next year maybe we don't do so well. I don't know. There's nothing I can promise. We strive to make in the market club. We strive actually to make more process goals than we do performance goals. I am a bigger educator than I am to just sit and pound out trades. I want to teach people how to think and how to do it themselves so that they make wiser, more common sense decisions.
That's good. Well, beating the S&P on a regular basis is impressive, and that's on a flat year hitting 15 to 18%. It's not bad at all.
No, it's not bad. And I mean, all of my traders didn't make that much. And it's just, some people did better than others. And as far as my personal accounts go, I'd actually have to go in and look at them and really see where they're at right now, because we got hurt last week for sure. But what we want to say is that in years like this, it's always about protecting your capital. It's always about protecting your capital, and you know that, Brandon.
Sure. Excellent stuff. Really appreciate you walking us through that. We are nearing the end of the conversation where we have a fast market round. That's a series of quicker questions where you can give us one-word answers or elaborate if you like. Starting off, Toni, what is the best trading advice you have ever received?
It stopped me in my tracks. The best trading advice I ever received was, when you're looking at a stock, are there more buyers than sellers, or more sellers than buyers? You go back to the basics, back to the basics, back to the basics.
Toni, who is your trading hero?
I don't know that I have a hero. I have a lot of friends in the business. I have very high regard for Linda Raschke.
Biggest mistake you see newer traders make?
They look at downtrends on a chart, a stock in a downtrend on a chart, and there'll be a rally in that downtrend, and their eyes aren't used to identifying downtrends as reality, so they'll buy the rally in the downtrend thinking that they're buying a reversal when they haven't really identified what's going on.
Is that a catch a falling knife? Is that what that is?
Yeah, and I was saying, I don't know if I'm wording that well enough to make a picture, but yeah, they don't realize that they're catching a falling knife. They think, oh, well, it's rallying, but that's why I always tell traders, go back and look at the longer term picture. And maybe that's the best trading advice I ever had, was this crusty old commodities guy. I was in his class years and years ago, and he used to say, he'd yell at us, stand up, back up, look at the big picture. And he'd make us get out of our trading chairs, back up from our computers, walk back 4 feet, and then look at the chart again. And that was back up, look at the big picture. And all of a sudden you start seeing things that you never saw, as myopic as all of us are, looking at these screens 12 inches in front of our noses. You will see things if you'll back up. And if you'll flip into a weekly chart or a monthly chart, that's where that's the best advice, because then you go, oh my gosh, I didn't realize this stock was up 100% in the last year. This is probably not a good time to go long.
What trading platform do you use, Toni?
I use actually 3.
Okay.
So I use TradeStation, I use RealTick, I use Metastock for charts and so forth.
Favorite online resource for traders?
Oh gosh, FinViz is a good one. FINVIZ.com.
Excellent. Your favorite trading book?
I've got a lot of favorite trading books. The first one, oh gosh, what was the first trading book out that we all read by Alexander Elder? Day Trading for a Living.
Okay.
I read that over and over again. Dr. Alexander Elder.
That's right. And Toni, give us newer traders some parting advice.
Okay, please be patient. Please don't think that you have to go in a position because somebody told you it's a really good idea. Please do your own research. Please find out a little bit more about the company if you're going to be in it for any length of time than just its symbol. Please do find out again what sector it's in, and you know what? You can train yourself within 3 or 4 minutes to go in and look at what a company does and look at its earnings record. because you can get taken out of a stock or stopped out because it's very low quality and we didn't take the time to go look at that. So it's something I know a lot of traders don't like to do, but I can guarantee you, you can do it in less than 30 seconds to a minute, and it's well worth your while.
So I really appreciate you walking us through everything. And here, as we're wrapping things up, if you've got a project that you're working on, something you wanted to tell everyone about.
I don't have anything right now specific, but I do want to tell everyone that we'd love to have you check in and say hi to us in Toni's Market Club. We hold that every Monday on Monday afternoon from 4:30 to 6:30. Sometimes it runs late. We have a great community of traders. We do a market approach. We do trading ideas and a lot of education, which I really feel is what it's all about. I want people to be we call our traders self-directed. I want our traders to learn and learn and learn and learn. So if I'm not sitting next to them, which I can't all the time, they can make really, really good decisions on their own.
Excellent. We'll definitely stick a link to ToniTurner.com in the show notes page so that everybody can check that out and then check out your market corner. I'm sorry, is that right?
Toni's Market Club.
Thank you. Toni's Market Club. And if anybody wants to reach out, Toni, how can they do so?
You can write to info at ToniTurner.com. That goes to our Director of Operations, Tina, and she sends it to me.
Excellent. Well, we will have that link as well in the show notes page. So if somebody wants to do that, they can check that out over at tradingstory.com/playlist. Toni Turner, thank you so much for sharing your story on the Trading Story podcast.
Thank you, Brandon. I really enjoyed it.
Hello again, guys. One of my personal goals for 2016 was to have more female traders on the podcast, and I was very happy to speak with Toni Turner, our first female trader on the podcast for this year. Toni has been trading for many years, and the wisdom just flowed out of the conversation. There were several tidbits that we could highlight, but one in particular would be helpful in any market, whether you're swing trading stocks like Toni or trading futures on a 1-minute chart. When I asked her about the best trading advice she's ever received, Toni said,
It stopped me in my tracks. The best trading advice I ever received was, when you're looking at a stock, are there more buyers than sellers? Or more sellers than buyers? You go back to the basics, back to the basics, back to the basics.
Some things about trading are complicated. Some things aren't. This part isn't too complicated to understand, at least conceptually. Get on the side of the majority in any position. If there are more buyers than sellers, then be a buyer. If there are more sellers than buyers, then be a seller. It may be hard to implement, but it is at least easy to understand. Hopefully that was helpful to you guys. I do appreciate Toni for making the time to be on the podcast today. And as for you guys, thank you for joining me. I know you could be doing a lot of things with your time, and as you're trying to understand the markets, make it as a day trader, a swing trader, position trader, or even an investor. My hope is that each of these podcasts make it just a little bit easier to be consistently profitable. Also, I wanted to give you guys an update on my trading journey, and one way for you to keep up even more closely than before. It's actually a little scary, but I'll get to that in just a second. I've been updating you guys on my personal trading results over at tradingstory.com/results, and I'm going to continue to do that. But that's only on a monthly basis, and you can continue to get those monthly updates if you want to, if you're so interested. But I added one more feature to that page, a link. I started a My FX Book account, which is now linked to my live trading account, not demo. By the way, I am at this point trading two accounts, one live account and one demo account. The live trading account is only a few currency pairs, and the demo trading account is all of the ones that I plan to trade. So for now, I'm going to continue demo trading some currency pairs, and my goal eventually, and actually eventually soon, is to move all of my trading over to my live account, assuming that February continues to be a decent month. The link to follow those live trades on on my FX book, at least my account, is on the same page of the website. You can go there by checking out tradingstory.com/results. On the next episode, we cover day trading for dummies. If you ever wondered about what day trading is, you may want to check out that episode in a few days. Till next time, all the best.
Trading Story is a financial publishing firm and does not provide individual investment, trading, tax, or legal advice. All opinion is intended for informational purposes only. Trading Story is not an investment advisor, a registered securities broker-dealer, or a commodity trading advisor. Nothing provided constitutes a recommendation or solicitation for the purchase or sale of securities. Past results are no guarantee of future performance. For more information, check out tradingstory.com/legal.